Welcome back. I am Pratap here. Today is 13th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is our first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our YouTube channel NeoStock. From the home page, scroll down to the playlist Supply Demand Zone Price Action course. Click on this playlist. You will be able to access all the training lessons in this playlist. Even I am providing the link to this playlist in this YouTube video description. Please click on the link, you will get into this page. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. You know, it is a very powerful concept. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the channel, it will be helpful to you. Each time when we release a new video, we will provide an update in that particular channel. Now let's get into analysis discussion. Even before we get into the high liquidity zones analysis, let us look into the high liquidity zones drawn in Nifty and Bank Nifty with the help of supply demand zone China during our last session on last Sunday. If you look into the trades, if you look into the zones, we have seen yesterday the orders are picked up from 125 minutes and 75 minutes zone. This 25 minutes high liquidity demand zone is pierced yesterday. But still, the prices are within this 75 minutes and 125 minutes demand zone. And today, once again, prices came to the same level. And from here, it has given around 80 points move. And then finally, this 75 minutes demand zone is violated. This is the one. And even the 25 minutes high liquidity zone is also violated. Such a powerful today the supply is. But what happened after that? Prices entered into this 5 minutes high liquidity demand zone. And from here, they have given around, maybe we can say, 22.57 and here 22.127. So almost 70 points move it has given from this 5 minute zone to this supply zone. Here we have a immediately available supply zone at 5 minutes from here to here. And again, once again, the second time also again the prices picked up the orders. Once again they reached this supply zone. Let me change the color because supply is very strong now. Now supplies not only help you reach the targets, but also they will be giving you new opportunity for the new short trades. Because Nifty moved to the supply area and from there it is coming down. Okay, anyway, we are focusing on our high liquidity zones, how they provide you trade opportunities. So this 5 minutes high liquidity demand zone has provided two trading opportunities in today's trading session. One is around at 12 o'clock 20 minutes or 15 minutes and another one is around 1 o'clock 15 minutes today afternoon. And finally reached the target. After that, this 5 minutes high liquidity zone is broken. And finally what happened? Once again, now prices entered into your daily demand zone. Within this daily demand zone, we have a fine-tuned 15 minutes. It's not the fine-tuned, it is the 15 minutes high liquidity demand zone we identified. Inside, daily demand zone is a normal demand zone, but inside we have 15 minutes high liquidity demand zone. See how the prices, how the orders are picked up from this zone. After that, Nifty gave you over 120 points move till this supply zone. here. It gave you around 120 points move. So we can say it is a 21,921. Here 22,037. So almost over 110 points or maybe 115 points move it has given. So this is how the high liquidity zones you can make use. Even the market is against you. Actually today market is completely against us. But even it is against us, where it actually got the supports, getting the supports each time at the high liquidity zone. Because supply is dominated, after couple of tests, 1 or 2 tests, the high liquidity zones are broken. Again in the next high liquidity zone, they have been getting the support. That is the point you have to observe. Same thing you can observe even in Bank Nifty also. Look into the Bank Nifty. See, yesterday the prices, they got the support from this, the 5 minutes high liquidity demand zone, which is in having confluence with 25 minutes high liquidity. Time being, let me delete this 25 minutes so that you exactly will understand. See here, it picked up the orders from this 5 minutes high liquidity demand zone. And today you see, once again the Nifty picked up the orders from the same 5 minutes high liquidity zone. But they went a little deep inside, that is okay. But it gave you a second test. And again up to here it reached the target. What could be the value here? It is 46,880. 883, or let us say approximate value 46,880, the round value 46,880. 47,107 or 108. $47,108. Minus 46,880. It gave you 228 points move. When it gave you during the last 45 minutes of your trading session closing. Sorry, during last 1 hour 15 minutes, not 45. During last 1 hour 15 minutes, at 4:15 candle it gave an entry, and at 3 o'clock candle, that is 15 hours candle, it reached the target. Within 45 minutes, it gave you 220 points move Bank Nifty has given. So this is how our high liquidity zones will be working. But the point you should not forget, now supply is very strong. Because they are high on the curve. All the stocks are at high on the curve. Nifty is at high on the curve. Bank Nifty is at high on the curve. And moreover, Bank Nifty is high on the curve. Nifty, we cannot say it is high on the curve. If you do not consider this rally based drop. Otherwise, if you consider high on the curve, Nifty, now it reached the demand zone today, daily demand zone. Now this is a supply, drop based drop is a supply. Actually, our software did not consider this rally based drop. For our software point of view, this is not good enough to consider as a leg out. Slightly missed. That is what I told you, I think yesterday or day before yesterday, when it was created on Monday, day before yesterday, during day before yesterday analysis discussion, I expressed, maybe we as a human, we may consider rally based drop, but software may or may not be, because the condition could be at boundary level, because software is very strict. Whatever the conditions, if the conditions are met, then only it will be. And if it is just even 0.1% difference to actual conditions we define, it will not consider this as a zone. Actually, 0.5% level, 0.5% level, the condition is, the condition is not met. That's why software point of view, it is not a zone, valid supply zone. For software point of view, it is a valid rally candle. This is a base candle. This is a medium size leg candle. This is a base candle, small candle. And this is a medium size drop candle. That is how software considered. When software will consider if it is a large candle. And for the large, to consider this as a large candle, 0.5% it missed. If the length would have been 0.5% more, it would have considered this as a leg out candle. So anyway, we have to respect the software. The reason is all these days, as per the software rules only, we are getting our profits. Definitely today it will consider drop, base, drop. This is a very large candle. Maybe it could be high explosive candle. We have a strength, zone strength, high explosive candle. Maybe today after getting the data, we can inspect what could be the candle it is. But my first impression is this is a high explosive candle. Leg out with high explosive. If this zone is violated, this demand zone, at present price is closed inside demand zone. In case tomorrow if prices came out and closed below or even peers, this zone will get an achievement. And not only achievement, trend also will be changed to sideways. Now counter trend trade setup will be enabled. But already this is for DIT trades. Not only DIT, WIT trades also, because WIT trade daily is the trend calculation. So your WIT trend will be changed to sideways if this demand zone is violated tomorrow or maybe day after tomorrow. But at present prices are closed. I think there is some strong order flow in this area. That's why there is some rejection from here, a small rejection. Tomorrow we need to see. And from here again prices will be moving up or not. But at this point of time, supply is very strong. That is the point you need to observe. But how strong it is, that we will understand only in the coming days. I can say this could be a valid supply zone, daily supply zone. Let me draw. Now probably one of these zones is violated, maybe this one or this one. We can't predict which one will be violated. But until one of these zones are violated, price will be moving between these zones. And moreover, now this is going to be, very soon it is going to be election season. And during these general elections, main elections, how our demand zones are going to react, how our supply zones is going to react, even how our high liquidity zones are going to react. It is a testing period, especially for high liquidity zones. This is a very good testing period. So we will get a clarity by end of May or mid of June, because by the time elections will be completed and new governments will be formed, new policies. Maybe same government may continue or may not continue. We can't tell anything, because we are not predicting what is happening in the politics. Anything will happen. But whatever it is, as a traders, we should be very careful, because a lot of volatility will be seen. Yesterday you have seen a huge volatility in the market. Prices are moving up, prices moved down. But today entire day is bearish till the last hour of the market. Last hour maybe it could be a short recovery last hour. That could be the reason why. But anyway, that happened in the demand zone. That is the point we need to observe. So this is about Nifty and the Bank Nifty. Now what we do, let us analyze the high liquidity zones. Yesterday we identified 1, 2, 3, 4, 5, 6, 7. 7 high liquidity zones we identified yesterday. Out of 7, 3 are executed. Actually, fourth one is also there. Fourth one I did not consider because the trade happened during last hour, and moreover it is on the tested zone, already tested zone. Even though it got the profit, but I didn't consider as a high liquidity, I did HLQ trade. But HLQ trade, only 3 stocks are executed. Out of these 3, 2 are stopped out. 2 zones are stopped out. Stop loss is triggered. And 1 we got a very good profit. So let us discuss those stocks. The one we got the profit today is in Polycap. Polycap is a high liquidity supply zone. We have a drop, base, drop. Previously already it gave an entry. At the time we didn't fine tune the zone, but institutions created a new 75-minute zone inside this and they pushed the prices. When they created a new 75, inside there is a fine tuned 15 minutes and 5 minutes, and today we got an entry here. See, today we got an entry. And then prices came, reached the 15 minutes target, and after that further came down prices. If anybody would have used trailing stop loss, they would have got even more profit. But anyway, I limited my discussion to up to this 15 minutes because by the time that gave a very good profit. So inside this daily demand zone, how we fine-tuned 75 minutes, this is the way. We have a rally candle, 3 base candles and a drop candle. This is the 15-minute zone. We have drawn this 15-minute zone. Inside this 15-minute zone, we have drawn the 5-minute zone. We have a rally candle, base candle, drop candle, and again a follow-through candle. And then prices came down, and today prices reached this zone. Around 10 o'clock, 40 minutes candle, prices entered into this zone. If anybody missed the trade, next candle also it gave an entry, but after that it came down. Maybe end of this 10:40 it went, and from there it might have continued. Within this 1 or 2 minutes, let us look into 1 minute's time frame. We will get clarity in how many candle. Yeah, this is the first, it gave 10:42 candle. Again in 10:45 candle. One of these candles you would have taken a trade. And finally it reached the target at 11 o'clock 57. So within 1 hour 15 minutes the trade is completed. This is the 15 minutes target. Let me show you in the 15 minutes time frame. So here we have a medium size candle. Maybe you can consider legging and a base and a rally candle. This is going to be our target. But today supply is very strong. In the next candle itself it is violated. Further came down. But anyway, we are limiting ourselves to the first 15 minutes target. This itself is a good target. And it has given 8,340 rupees profit, which is 7.2% ROI as per one futures lot. So it's an excellent trade, Polycap. And the next one is Aurobindo Pharma. Aurobindo Pharma is stopped out to trade. It is a daily high liquidity demand zone, drop, 2 base candles and a rally with a gap. And today first time the prices came and violated. Everything is good. The structure is good. We have a fresh fine-tuned zone. So if that is the case, obviously we have to accept the trade. Let me show you. Here we have, sorry. See, here we have a 75 minutes demand zone. We have a ERC candle as a leg-in, and then we have 4 base candles and a rally candle. And inside this 15 minutes, we identified, inside this 75 minutes, we identified a 15-minute zone. So this is a leg-in candle, base candle, a drop candle. This could be, I consider this, maybe somebody consider all these are all base candles. Probably you might have thought, maybe, I don't know, maybe that could be one reason. Actually, why you might be wondering why I consider this is looking like a small candle, why I consider. See, many times I told you, when candles are with gaps, all these candles before this looks like small teeny candles. This is a trading view visual representation problem. Now let me hide this candle, you will get clarity. Now look into this candle. This is definitely a ERC candle. See, this is a medium size candle, but see, this is, compared to this medium size candle, this is a very large candle from here to here. See how big the candle is. It started here and started here. Such a big candle, obviously you consider as a ERC candle and a leg-in. And see the next candle, this is a base candle. See, all of a sudden it become a very short candle because of this gap. This is, I don't know, visual representation problem in trading view. All of a sudden candle structures are changing based on this. So that is the reason why I consider this as a leg-in. But if you see like this, all these candles are looking like base candles. Lot of consolidation took place. If that is the case, this zone will be violated easily. But anyway, I have selected this zone as a valid zone, and when I fine-tuned in the 5 minutes, for me this is a leg-in candle. After that, base candles, 1, 2, 3, 4, 5 base candles. And then a leg out candle with gap. And today prices, they came to the zone. See the rejection, because order flow is there. See the rejection from here. Even went very close to the digital line, again rejection. So there is an order flow. You may ask a question, then why it is violated? Because today's supply is very strong. It is stronger than the pending orders in this area. Maybe here demand is very strong, no doubt in that. That's why there are rejections. But today is a bearish day and institutions keep on adding supply. Probably that is the reason why it consumed all the pending orders. Maybe it waited for 5 minutes candles. You see, the first time when it came, it gave a rejection. Second time, because it is already consumed, they went more deep inside. By the time supply is consumed, and again it gave a rejection. But institutions might have added a new supply here. So this time it's violated. It's pierced, and ultimately it is violated here. Maybe below here there could be some strong order flow at lower time frames, maybe at 1 minute level. Again they pushed the price up, and again supply is very strong. Ultimately this entire zone is violated. So that is the reason why we got loss, because it is a stopped out, obviously we get loss. What is the 2090 rupees, which is 0.9% ROI. Because the cost of one future slot is around a little over 2 lakhs. maybe around 2,10,000 or 20,000. So that's why your ROI is 0.9%, negative ROI. And the third one is Bata India. It is also stopped out. But this is a 75-minute zone. (75 minutes) demand zone. It's a rally-based rally. We have a rally candle, 2 base candles, and again with a hidden body. Hidden body, a leg out candle. This is the way we have drawn the zone. Previously, this zone is supported here. Previously. Because it is already tested here, some you will see in 15 minutes. But slightly they moved, prices moved beyond this zone. But otherwise, previously here you see, you have a rally, a base candle, again a rally. It's not very clear, but okay. Not a very good leg out candle here. But some price action took place previously. Or you can do like this, drop 2 base candles and a rally. This is the valid one. From here previously it picked up. Maybe it could have a little above this zone. It is acted as an entry, dynamic entry buffer. The concept I explained you earlier once. So it has given several, maybe first time, second time, just above the zone. Third time just touched the zone. Because it is at the border. And today prices went into this zone. So let us look into the 5 minutes fine-tuned area. So this is a ERC candle, a leg-in candle, base candle, and a rally candle. This is the 5 minutes area. We are supposed to take the trade. And today these prices came into this zone, pierced and violated. Now the institutions created a new demand zone, drop, base, rally. Again that is also violated because today supply is very strong till the last minute. Probably the shorter during the last trading hour, last 40 minutes time period, probably the short orders are covered and prices moved up. That is a different story. But this zone is gone because this zone is violated completely. So it's a stopped out trade. And Bata India has given a loss of 338 rupees, which is 0.4% negative ROI. So very small loss. So these are the 3 trades executed. There is a 4th one which I didn't consider. The 4th one is burger paints. Let me show you the analysis. It is a 75-minute zone. We have a rally candle, 2 base candles, again a rally candle. This is the one. Already it gave a very good, inside this 75 we identified 15 minutes. First let me complete the analysis and then I will tell you. See, we have a leg-in candle. This is the one. Leg-in, base, rally. We have a drop, base, rally. This 15 minutes area. And here also we have a failed ERC as a leg-in. We have a base candle. Again we have a rally candle with gap. And see here, previously this zone is tested. Once a zone is tested, we can't trade. That is the rule. But see here, the kind of rejection here. Sometimes how we can take deviations from the rules. That is also you should understand. See the rejection. Huge rejection. Generally rejections could be small. Next candle again they move, next candle again they move. From continuation to the rejection. But see this here. In one candle itself, how much rejection it has. That indicates a very strong order flow. And moreover, prices didn't go deep inside. just at the edge of this type 1 proximal, maybe the 15 minutes proximal, the price has moved up. Let us go to the 5 minutes time frame, you will get clarity. See here, this is the type 2 proximal. And see the rejection from this candle. Just enter into the zone and see the rejection. That indicates a very strong order flow. When you see such kind of huge rejections, there is nothing wrong in taking a second trade. Those who take more risk and wants to trade, for those people, maybe they can plan second. But those who are looking for safe trades, don't. Once it is tested, leave it. That's it. When you can take second trade, if you have a confirmation if it is a high liquidity zone. Anyway, I didn't show you in the software. Even I didn't check also because I didn't have time and I couldn't check whether this is high liquidity or normal zone. But whatever it is a tested zone. So that's why I didn't consider. But generally we can consider. It's actually, generally I consider this kind of trades. The reason why I didn't consider today, there is another reason that I will tell you once I show you today's data. But remember, why I didn't consider. But generally, when you have such kind of strong rejections, I will take risk. I will consider for the second trade. There is nothing wrong. And apart from this, there is again another 5 minute zone. This is a little risk is high here. See the risk. Compare this 5 minutes and this 5 minutes. This 5 minutes is 3 times more than whatever this 5 minutes. Maybe 2.5 times more the risk here. But anyway, this is tested already. Twice it is tested actually. See here, the prices went deep inside. Generally went deep inside, we don't consider. But it gave second time also it gave the trade here. Now also they went deep. Anyway, more than 2 times means third time is quite risky here. Maybe same day it happened. Okay, same day it is. This is possible. No, not same day. Next day it again tested. This is the last hour of February 28th February. This is 29th February. 3 times it is tested. And we don't know whether it is high liquidity zone or not. But anyway, today it is violated. And moreover, it is tested already 2 times. We can't take a trade. But see here. Today what happened? Prices came again. And see how much return it has given from here to here. But when it happened, the reason why I didn't consider is this happened at 2 o'clock 40 minutes during the last 45 minutes of our trading session. It is quite risky. But those people who wants to take a trade, they can take only 5 minutes targets. That is what I told anybody. But this is moreover, this is a second test. Because this is the second test, during the last 45 minutes, we don't know. This zone also might have been violated also. So by considering all these things, I didn't consider. But actually, it worked very well. That is it gave a very good profit. It would have given a very good profit. See, from here to here. Probably here you have a 5 minute supply zone is there. This could be definitely, no doubt, this could be extraordinary. Maybe I don't know. It is 10% ROI you will get. This is somewhere around 553 rupees. And this is around 560 rupees. Around maybe over 7 rupees plus profit you would have got. Definitely would have got a good profit. But anyway, one thing is this is already a tested zone. And by the time prices entered here, that is the last 45 minutes. Last 45 minutes you need to look for 5 minutes target if we want to take a trade. If it is a fresh zone, we would have taken this. But it is already tested, we ignored it. So that's why I didn't consider this as a trade. This is the point you should understand. And you know the reason why it is violated. because it is already tested zone, already tested 2 times. So we can't take any more risk on this. So easily violated. Okay, this is about the trades that are executed today. This is one we didn't consider, but we considered 3 trades. Out of 3, 2 are stopped out and 1 gave the good return. And there are a few more trades executed, but they are violated. We know that they will be violated well in advance. So let us look into those stocks. The first one is BHEL. I think only one stock, I guess, that is stopped out, BHEL. And we know BHEL will be violated easily. Even yesterday, I remember someone asked me about BHEL in the comment section. That is not in this HLQ report. BHEL is also identified in a bullish trade setup for monthly income trade, because this is a daily zone. BHEL is a daily zone. Let me go to the daily time frame. Rally, base, rally. You know the beauty of BHEL? This is a good trap by the institutions to get the liquidity. BHEL is a high liquidity zone. It supported even bullish trade setup. Do you know the odd enhancer score for BHEL? The odd enhancer score is 15 out of 15. Definitely anyone will tempt by seeing this stock. Even yesterday someone asked a question, I didn't remember exactly the question he asked me, but the reply I gave, I remember. The reason is, by the time I looked into the question, I already fine-tuned this zone. When I asked this question, I told him, I didn't tell this zone is violated, because I am not supposed to tell before the trading. Post-mortem, okay, I can discuss. But I gave the clue. Fine-tune the zone. If you find proper price structures till the 5 minutes time frame, then only you have to accept the trade. That is the statement I gave. I gave a clue. Because if you fine-tune, you would be knowing that the proper 5 minute structure is not there. By seeing the 5 minute structure, we easily know that zone will be violated, because all base candles are there in 5 minutes. Let me show you. That's why I stopped up to 15 minutes analysis only I stopped. See, this is a daily zone. Inside the daily, you have 75 minute zone. Rally, 3 base candles and a rally. And look into the 15 minutes. Not 5 minutes, 15 minutes itself I stopped. I didn't draw 15 minute zone here if you observe, because see the base candles. Even you hide the gap, because sometimes because of this gap, all these candles look small. That's why I hide. Even if you hide this candle, still they are all base candles. See here now. We have 1, 2, 3, 4, 5, 6, 7, 8, and maybe this is the lagging candle. You have 1, 2, 3, 4, 5, 6, 7, 8 base candles. When you have these many base candles, definitely there won't be any order flow. The institutional orders already consumed here. Basically that is consolidation. And see today what happened? Easily the zone is violated. Maybe some rejection has given a small at the distal line. Maybe there could be some 1 minute order flow might be there. But it's temporary, small. See the next candle, completely violated. But if you really look into, see here who saved us? The fine tuning the zone. That's why I always tell you need to fine tune the zone up to 5 minutes. If you have fine tuned 5 minutes, then only you have to take the trade. Whether you are taking at 5 minutes level, or you are taking at 15 minutes level, or you are taking at trade at 75 minutes level, that is a different thing. Where you are taking entry is not important. Till 5 minute zone you have a proper structure is there or not, that is important. Because sometimes what happens, if everything is perfect, prices may not go up to 5 minutes level, just at 75 minutes proximal or 15 minutes proximal itself prices will start moving up. Because strong trend, strong odd enhancer score, strong price direction, all these will not let you price go on to 5 minutes fine-tuned area. Before that itself prices will move up. Sometimes. So that's why I'm telling you, there is no rule that you have to take a trade only fine-tuned 5 minutes area. But till fine-tuned 5 minutes area, proper structure is there, we can believe on that zone. Where you are taking is a different story, but you can believe on that zone. But anyway, intraday traders trading point of view, we have to take trade only in fine-tuned 5 minutes. We don't have an option, otherwise we won't get RR. We won't get good RR. But if you are taking a monthly income trade or weekly income trade, you need not wait till 5 minutes prices are come. You can take even before itself. But the thing is, till 5 minutes, the price structure should be good. Otherwise, what will happen? This is what happens. See, today's zone is violated. Just by looking into the report, what I am publishing, based on that, if you are taking decision, most of the time, your decisions won't be good. That's why from the last 5 months, always I keep on shouting and shouting in all my videos. What is that I am shouting? Check for till 5 minutes, the price structures are good. You have to check that. Then only you have to give guarantee to that zone. Even the same thing I told you for even bullish and bearish trade setups also. Always you have to fine tune. Fine tune is not for the entry point of view. This is the point I told earlier several times. Even in this video also again I am telling you. Fine tuning the zone need not be for entry point of view. Fine tuning the zone is for checking the quality of that particular zone. Because you need, before taking the trade, always we need to check the zone will be, are there any chances for the zone to be violated? Because I explained all the scenarios. Several examples I gave you in several HLQ zone videos. See, today I am showing you this example. Like this, for the last 3 to 4 months, several examples, probably it could have been, you might have been seen over 30 or 40 examples you might have seen. That means last 3 months, 30 or 40 zones violated, but we predicted them before itself. Check my yesterday's WIT and MIT reports generation video in the comment section. One person asked a question. I didn't exactly remember the question, not related to zone violation, but I remembered the time I worried because he is going to take a trade in that zone. But I cannot recommend you take a trade. You should not take a trade because I have my own limitations to comment till the day completes. Now I am doing post-mortem analysis. Now I can comment. This is education. Whatever I am telling you is education point of view now. Now no more trading because trading is completed for all these zones. Now education point of view, now I can talk. Now I have the freedom to talk. But before taking the trade point of view I cannot comment. Education point of view I can tell. But yesterday the question he asked is about the trade point of view. That's why cleverly I answered. This education point of view I gave a suggestion. It's a clear education suggestion. I didn't tell him take a trade or don't take a trade. I told him check the 5 minutes, till the 5 minutes, the price structures. If the price structures are not good, we cannot trade, take a trade. That is what the indication of that message. Hope you would have understood. If you did not understand, my suggestion yesterday, definitely you would have taken a trade and you would have got a stopped out. You know when a zone will be violated, till you take a trade, it is a very pity situation. That's why without proper education, why I am stopping many people not to take the trades, do only paper trades, because you should get proper education before you get into the trading trades. I still remember in one of the videos, I think the latest training video, yesterday one person put a comment with an anger, but he don't want to express his anger, but he expressed his anger in a polite way. You know what is the comment he said? Okay, lifelong we do paper trading. Thank you. So his anger is lifelong. He wants to, because that is what he is thinking, that I am suggesting you people to go only paper trading lifelong. So he expressed his anger. But until completion of the course, you cannot get into the real trade. See, get into the real trade and losing the money is easy. Can't we wait for 6 months' time for your education point of view? You are studying 5 years or 4 years for your engineering, 5 years for your medicine, 3 years for your degree, like Bachelor of Science or Bachelor of Commerce. When you spend so many years for your education, can't you spend 6 months' time for your proper training, really money related? Moreover, this is money related. See, money related, in fraction of a second you will lose money. Fraction of a second. If you make a mistake, one mistake will cost you lose the whole money. A rich will become a poor in just fraction of a second. When you such a high risky market, when you are investing, you have to spend some time for your education. You have to ensure your skills are proper. How do you ensure your skills are proper? Only once you do paper trading. Can't you spend 6 months' time? When we started our training, somewhere in the month of October we started. We completed the phase 1 training. So much of effort you put. Now you are almost at the ending stage of your phase 2 training. Probably during this month you will be completing. Especially the next session is the most important. The ultimate risk management related concepts you will be seeing in the next lesson. All these concepts will protect you. Why you are doing paper trading? By doing paper trading, what mistakes I am making, or what I missed from my training, or where I need to focus more. Such kind of clarity you will get. Once you know your mistakes, you will try to rectify your mistakes. Once you get into the real trading, you won't make those mistakes. See, my responsibility is to give you suggestion. What is right and what is wrong, that's it. Ultimate decision you will take. If I ask you don't do paper trading, if I ask you do paper trading, do everybody is doing paper trading? No, some people are not at all listening me. Some people are listening me. If you get angry on me, what is the use? Because I told you do paper trading, if you don't like, you do the real trading. Who am I to stop you? Nobody is restricting you. You can participate in the trading. Because your education is not complete, you will get the loss and you might lose some of your capital or good amount of your capital. I am not the responsible for that, right? So don't get angry on me. No use with that. If you really want to learn in a proper way, you have to follow my instructions. You have to patiently wait. If you don't have patience to wait for another 1 month, obviously, I am helpless for that. My way is to give you a proper guidance, that's it. If you don't understand these points, It is very easy to lose the money in the market. First of all, why I have to spend all these so many hours of time to educate you people, to share my experience and knowledge? What is it I am getting in back? Nothing I am getting from you, right? People, by seeing these kinds of comments, what I understood, people wants to be overnight, they want to become crorepati's. You can't be a crorepati in just like that. Several years of discipline is required. Several years of discipline to get into that stage. Overnight, you won't become a crorepati. Please remember my advice. Whatever the anger you shown me, of course you shown me in a polite way, I agree with that. But before you make that comment, first understand where you are. For your knowledge point of view, check where you are. Have you done the complete paper trading proper way? Did you learn by doing the paper trading or not? If you are up to date, there is no reason in getting angry on me. You should be very happy for that. You gained so much of knowledge. You already saved 7,000 US dollars by attending this training program. One of the top training institutions in USA, they are charging 7,000 US dollars, but they are not teaching you each and every concept I explained. When you saved that much money from this education, there is no meaning in getting angry on me. Okay. So you have to understand, BHEL, we already know this zone is violated. That is what happened today. Apart from that, the other stocks, HDFC Bank, we didn't get a trade today. This is a drop-based drop. Already tested once. We have fine-tuned this. Let me show you in 75 minutes. Again, this is same daily zone, also 75. Here we have a leg candle, 2 base candles and a drop candle. And within that, sorry, this is 125 selected. Sorry for my mistake. So here 1, 2, 3, 4 base candles and drop candle. This entire thing is a daily and 75. But within that, we fine tune to 15 minutes zones, 2 15-minute zones. So this is a ERC candle. So I consider as a leg-in. Then this is a base candle. Next a drop candle. Apart from that, there is a rally, 3 base candles and a drop candle. So inside these two, again we fine-tuned with the 2 5-minute zones. If 5-minute zone is there, then only we consider the structure is good. Now we consider a rally candle, 3 base candles and a drop candle. So this is the type 2 entry. And here also, I told you sometimes we compromise and draw the zones. This is such kind of zone. Okay, I consider this is a medium size leg candle, but not really, need not be. But okay, This is a base and a drop candle, not very great leg out candle, but after that a good follow through candle. Sometimes we will, to identify the real order flows, we draw. And moreover, before the zone, see the rejections are coming here. Exactly, if I draw a horizontal line, you will get clarity how I am measuring all these things. See here, before these prices are coming. That means there is a strong order flow in this area. So it's a very good zone. If prices enters, definitely we get higher chances to get success in this zone. That is the way. That's why sometimes by considering such kind of factors, I compromise and draw certain zones. This is experience. Once your experience grows, you will draw such kind of zones. Don't expect you people to draw exactly the way how I am drawing the zones at this point of time. Certain level of zones you will be able to draw at this point of time, because I've been sharing my knowledge every day. But compromising and still I am in a position to draw some zones and finding areas, the real order flows. That level it may take some time for you to understand. Once your experience grows, you will observe many points. Based on your observations, you will be in a position to draw the zones. That is what I named as compromise and draw the certain zones. See, in the training you learn all the rules. With the strict rules you learn. You get relaxation from these rules once your experience grows. Because education point of view, first you need to learn the essential concepts. That's why the rules are very strict. The 50% rule, base candle rule, or 75% rule for a medium size leg candle. All such kind of, or you should have a very good strong leg out candle, large candle. All these rules, you take slight deviations once your experience grows. But while learning, you should be very strict while learning. But anyway, prices did not enter, but this zone is already tested. Just I want to show you, I kept it. This is already tested. So we can't play a trade again in this zone because it is tested. Moreover, prices went more deep inside. But one point you need to observe, here already it gave rally based drop, already it created a zone. And because it created a zone, again even that is also tested already here. See here. This is a valid zone, but prices entered into this zone. The type 2 entry here. This is on last Friday. So that's why by considering all these things, we cannot plan a trade in this zone. And today prices didn't enter into the area. So we didn't get the trade. Actually the one above this. The one above we are planning, not the below one. Just for education purpose I need to explain, I kept it on the chart. And the last one is, I think two more are there, SRF and Britannia. And another one is SRF. Since trading view is very not opening, yeah. This is also a 75-minute zone. There are two zones fine-tuned. Inside we have two 75-minute zones. Let me show you. This is a daily zone. Sorry, this is a daily zone. Daily supply zone, not 75 minutes. This is a daily supply zone. We have a rally candle, two base candles and a drop candle. So inside we identified two 75-minute zones. We have a medium size leg candle, base, drop. Again we have a leg, this drop is again a leg in for the next zone. And 4 base candles and again a drop. So inside these 75 minutes, we have drawn 15-minute zones. We have a leg in, 2 base candles and a drop candle. And here again we have leg in candle, 2 base candles and a drop candle and follow through candle. This drop is not a great leg out, but okay, considerable, and again follow through is there. This is how compromising and drawing few zones sometimes. This is a 15-minute zone. But inside we need to find the real order flow. That is the goal. So going for 5 minutes. Within the 5 minutes, it looks very slow today, trading view. See here we have a leg in, this is the 5 minutes, leg in, 2 base candles and a drop candle. We have drawn this 5-minute zone, and here also we have this entire thing is a failed ERC is a leg in, these 2 base candles and a drop candle. So we are planning a trade in this zone. Why not in this one? Because this is already tested one, this is 5 minutes. Let me show you the recent data. See, this 5 minutes is tested on Monday. Monday this 5 minutes is tested, and see the rejection and prices came down. Now continuation to this test, prices are moving now. Even today we didn't get entry because this price action is based on this entry. Gave some recovery. Recovery means profit booking. Now prices are moving in the down direction. Again is the down direction, reactions. Again moving down, again some reaction. Again moving down. That means lower lows and higher highs it is forming. Currently it is downtrend SRF at 5 minutes time frame level. Okay, this is about the trade we didn't get today. And the last one is Britannia. Sorry, not Britannia. This is Bata India. We already discussed it, right? Yes. Bata India is a stopped out trade. It is there in our list. Yeah, SRF is the last one. Have we missed anything? Burger Paints stopped out. Bata India stopped. Burger Paint is not stopped out. Last minute trade we didn't take. Bata India stopped out. SRF we didn't get a trade. Polycab we got a very good profit. And HDFC Bank we didn't get a trade. HDFC Bank we discussed it, right? Did I explain HDFC Bank? This is a daily drop based drop. Inside we identified 2 15-minute zones. This entire thing is 75. Inside 2 15 minutes. Each 15 minutes is having fine-tuned 5 minutes. The first one is already tested. We were looking for a trade. We know the first one will be violated, but today prices didn't reach. We are expecting a trade on the top one in HDFC Bank. So we didn't get a trade. So today we didn't get trade in SRF and HDFC Bank. BHEL we know it is violated, and it is violated, and Arvindo Pharma is stopped out. So this is what the high liquidity zones generated in our previous report, and these are the 3 trades happened today. Hope this information is useful to you. Let us all meet again in our next video. Thank you.